Welcome to the Private Equity Profit Podcast. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Greene is the nation's foremost authority on growing your business. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes, Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity and real estate funds, discussing developments and trends shaping the industry. These experts will share with you how they've leveraged the power of equity funding to grow their businesses and increase profits, and how you can too. And now, here's your host, Seth Greene.
Welcome to the podcast. This is your co-host, Seth Greene, with Beatrice Mitchell today of Sperry Mitchell and Company, founded back in 1986. Today, one of the oldest and most active independent M&A advisory firms in the United States. Beatrice, thanks so much for joining us.
My pleasure.
So let's go back in time a little bit. How did you get started?
Well, like most things that happen in life, they're often accidents. And I was looking for a job, met somebody at a party. I was in advertising. I probably would have been fired if I hadn't quit. And I met somebody at a party who said, "Oh, I'm selling privately held companies." And I nagged him. And eventually he gave me a job, and that's how I started. So with my partner, Paul Sperry, and I, who had just dropped out of a PhD program because he didn't think he was going to get a job when he finished his PhD in history. We met at the place we worked, which was called NCZ. And after about 3 or 4 years, we started Sperry Mitchell.
Awesome. And then tell us a little bit about what you do as an independent M&A advisory firm and why you're different.
So what we do is we sell privately held companies, and we also do a little bit of divestiture work for private equity firms, but mostly it's working with entrepreneurs. And I would say what makes us different is our product is a very high touch product. You get a really, really good service level from us that I'm not saying other people don't also provide it, but I can tell you what I do, and that's what we do. We provide you with very good service. And because we own the company, I think there's less pressure on us to say you have to take a deal. And not often, but occasionally we'll say to a client, you know what, we think you should take this company off the market. Wait 2 years, let's go back. That I think is a little bit different. I don't have to make a deal to survive, luckily, because I've been doing this for so long. So I think you get, I say at this point, our business is more for half consultants and half M&A. And the consulting part is talking to somebody for years before they may want to sell.
Okay, so there's a whole lot in that answer. Let's unpack some of that. So you are talk a little bit about the sweet spot. Like what is an ideal company for you to help negotiate that exit?
Well, the perfect company is a company that's growing quickly, that has a proprietary niche, that is totally defensible. I don't think this company exists, by the way. That has a management team that wants to stay on forever. That is a management team that can grow the company. A lot of entrepreneurs get to the point where they will come to us and say, "I don't think I can do anything more with this company. I'm nervous to put any more money into it. I'm now betting the farm. It's too valuable. I'm holding the company back because I'm not making the right decisions." But anyway, back to that perfect entrepreneur who doesn't care about, he's willing to put every dime back into the company. He's not worried about betting the farm. I guess that's our perfect client. I've never met that client.
Okay, so then we'll narrow it down just a little bit. Is there a revenue volume? Is there an EBITDA that you like working with? Are there industries that you've had great success in? Talk a little bit about it that way.
So having been in the business for so long, we've done close to 300 deals. So I would venture to say I may have done more retail deals, which is not a field I think I'm particularly good at over the years, but we've really done a lot of deals in a lot of fields. Right now, we're doing a lot of defense deals. That's an area that came through COVID very successfully. They were long-term contracts, so buyers are not nervous about business going away. business didn't slip and during COVID. We just completed our second in less than 12 months defense deal, and I think we have several new defense clients, defense-oriented clients, meaning that they're producing a product that could be sold to a defense contractor who's selling to the government. And I think that's right now a particular, I want to say it's a particular strength. I think whatever we do is a particular strength. That's an industry, we're seeing a lot of interest in the defense area, and therefore we're following it. But was that your full question? I'm not sure it was. Oh, you wanted to know about EBITDA. We are looking for profitable companies. Most of our deals will sell. Their equity value will be anywhere from on the low side 20 to the high side 150 million. And I would say most of our deals are in the 30 to $80 million range. So what we call small to mid market. Other people might call it small, just too small for, say, Goldman Sachs to want to even think about handling.
Understood. All right. And then what do you like best about what you do?
Oh, I really love that. I love everything I do. I feel so lucky. I always say my hobby is my job. I feel incredibly fortunate, just so fortunate. But what do I like? I really love meeting and working with entrepreneurs. Maybe because I am one myself. I think we're all a little bit off in some way. We're not off. We just look at the world a little differently, and we see possibilities where other people don't see possibilities. I think that's maybe the biggest difference between an entrepreneur and a non-entrepreneur. I think my clients are fantastic. They're just so interesting. We generally become friends with our clients afterwards. And that's been, if I look back at my career, I'd say that's the highlight, is helping people who are incredibly successful as it is to realize their dream of taking some chips off the table, but also helping them to take the next step with their business.
That makes a lot of sense. What are you've pivoted the company? I mean, you've pivoted your clients through some tumultuous markets, everything from, obviously the 90s to 9/11 to now COVID. What advice are you giving founders now that's different than even, let's say, 2 or 3 years ago?
So COVID was interesting because it hit a lot of industries. It was except for, say, defense and business services. So we sold a couple of companies that service elevators, and those were incredibly hot. That was last year. Why? Because it doesn't matter what's happening to your building, that elevator has to be serviced. If you have no tenants, you still have to service that elevator. So it's recurring revenue. So, but besides that, I mean, an awful lot of clients we took off the market just because who knew what was going to happen, and they really were. Orders just completely dried up. So I would say COVID was maybe different than anything else I've seen before. In the past, there've been rolling recessions, but they tended to hit, specific industries. It was maybe, you could pivot to a different area, a different industry, and life went on. But COVID was different. What am I telling people right now? I'm telling people to be very much aware of the fact that the taxes are going to change. And if capital gains rate goes up by, say, 10%, you could have put your company on a year later because you thought your earnings were going to grow and you thought that your multiples were going to stay the same. But if you have to give a third more in taxes, that's probably not a good trade. Not saying you have to sell now, not saying everybody should do it, but everybody should have in the back of their mind that, gee, if I was thinking about doing it tomorrow or waiting a year, maybe tomorrow, so that you can take advantage of the very low tax rate, which we're experiencing right now.
That makes a lot of sense. What are some, I think we learn more from the failed deals, the deals that don't work out the way we think, than the ones that are easier, not that any deal is easy. What are some of the challenges you've had to overcome, and what did you learn from them?
I don't really think, we don't really have failed deals. If a company doesn't sell, we'll go back, get the price that the owner wants, let's say. We'll go back to the drawing board and say, look, this is what we've seen in the process. We didn't think this was going to be a problem, but it is, and you got to fix it. And it might be your management team is too thin, or we had a client that put in an ERP system and it was a complete disaster. Not their fault, it just didn't, ERP systems are tricky to put in. We took that company off the market and have put it back on the market, and now it's in the letter of intent. So again, the advantage of working with a smaller boutique that's owned by the owners is that I don't have a quota. I don't have to do a certain number of deals a year. I don't get, my bonus isn't dependent on. So I'm very happy to give people what I think is honest advice and say it's not the right time. But we stay with people. We never let them go. And unless they just change their mind, don't want to sell. I mean, really, I think eventually we sell them all.
You've also written together with your partner the book, The Complete Guide to Selling Your Business. What inspired you to write the book?
An awful lot of people don't know what the sale process is going to look like. And I think that book came out kind of around the time What to Expect When You're Expecting came out. And I thought, gee, for a lot of owners, they really have no idea what's going to happen. And it is a process selling your company. And the first call we got after that book was published was from a guy called David Tarver. We sold this company called TAS, and he said he was on a plane, he bought it. And he said, wow, I really understand what I'm about to go through. I had no idea. I mean, that was why it was kind of a way to educate our clients in a nice way. Because if you call somebody up and you say, this is going to be a 6-month process, it's going to be this, and this, they're going to run for the hills.
Absolutely. What are some of the biggest mistakes you think entrepreneurs are making when it comes to preparing their businesses for exit or acquisition?
In the past, I would have said get audited statements, but now because of the predominance of QOVs, I don't even think that's a problem anymore. The biggest mistake is that people should be realistic about what they're going to get price-wise. So we won't start a process without giving a potential client, evaluation so that everybody's on the same page, because I don't want to overpromise. We're not the kind of people, I don't have time to say, I think you might be worth $100 million, and then they're going to sell for 20. That does nobody any good. So I think the biggest mistake is that people thought they were worth more than they are. This market is so strong right now. EBITDA multiples, companies selling priced off their EBITDA are the highest I have ever seen them. And that's for a simple reason. There is so much money out there chasing deals because private equities raise money. Family offices have money, strategics, stock price is high, and they've generated cash. We have, I don't know how this is going to play in our market yet, but the SPAC business, I think SPACs are going to compete with PE pretty soon. I know they're doing the high growth, but they're going to run out of those companies. They're going to have to start looking at our companies too. So there's just a lot of competition for deals right now. So to give you an example, in the middle of COVID, we were selling a company. We were doing everything by Zoom, and we had 8 buyers, and 2 of them said, I don't care what you say, I'm coming to visit you, which I thought was extraordinary. I mean, we're in the middle of COVID. And lo and behold, they got on planes and they came to visit, and thank God nobody got sick. But, they're very aggressive. The buyers are very aggressive right now. So I was going to say valuation, but in fact, I think values are holding and are high. And most people, given where we are multiple-wise, are realistic about what their company's going to sell for.
With so much more competition in terms of buyers and valuations, perhaps multiples being driven up, you've got to have more competition for representation. How do you differentiate yourself?
Well, again, I think it's our high touch. It's the service. It's the quality of our people that are here. It's the quality of the selling memorandums we put together. It's the quality of the lists that we will bring to the potential buyers that we bring to you. But I will tell you this, most of our business has become referral at this point. And it's, I got a call from somebody who said, I've invested in the company and I know your work because I'm a private equity person myself, and you sold a company to me and I thought you did a great job. I would like you to handle this deal. That's the way it works. And I bet it works that way for everybody, I would guess.
I would imagine after 300 deals, you've built in decades and decades in the business, you've built up quite a Rolodex. How are you staying in front of those people who maybe they didn't buy the deal that at the time, but they could be a good prospect for another deal you have in the future pipeline?
I mean, the buyer, we have an extensive list of buyers, and we have a very good CRM system, and we are in front of people all the time. Plus, people call us all the time to update us. Like my fund just did a deal, or we just closed a deal. We're looking for this new platform. We are constantly in touch with buyers.
What have been, I know 300 is a lot to remember. What have been some of your favorite deals?
I think my favorite deal was when we sold Rolling Rock beer, which was owned by the Tito family in Pennsylvania. And my partner and I went down there, and suddenly they said, "Yeah, everybody, it's break time." They get a break 4 times. The workers get a break. Everybody goes to the water. Everybody has their glass. They go to their coffee mug. They go to the water station, not the water station, the water fountain. They turn it on, and we realized beer's coming out at 10:15 in the morning. That was a very fun deal. There are lots of deals. There's so many good deals. I mean, I guess this is fun business.
Absolutely. You talked about the increased trend in competition in terms of money chasing deals.
Mm-hmm.
How do you think the current interest rate environment, the current economic environment, are you seeing more sellers come to market because of the current situation? Has that changed at all?
I think sellers are, and we're educating them all the time, very much aware of the fact that this is a great market. So, and because the market is so competitive, almost every client we take on will have had a call or 2 or 3 or 4 from a potential buyer, usually a private equity firm that's reaching out to them directly to try and buy them without going through a process. So I think people are very much aware that this is a strong market. And again, we're doing mailings, not mailings, but email blasts all the time to our past clients, our current clients, our potential clients, buyers, everybody, just trying to say, look, these are the trends we're seeing.
I was going to say, you've been recognized as a thought leader in the industry for a long period of time. How do you stay on the forefront of everything that's going on? Because again, you mentioned a preference a lot in the defense space and the contracting space, but 300 deals, they're not all in the same industry. So how do you stay on top of trends all over the map?
We have very good analysts here and who do a lot of research. But generally, if somebody comes to me, we've done something in either in that field or a related field. So I don't want to sound boastful, but I don't think it's hard for us to get up to speed, or we are already up to speed.
You mentioned the analysts. Talk a little bit about the team that you've built over the years.
Well, we have senior people who've been with us for a long time that I'm thrilled with, and they're just very strong. We hire right out of college, so we like to train people ourselves and keep them. That's kind of our modus operandi. It's what we've always done.
All right. And then what do you, you are a voracious consumer of content. Mm-hmm. What are some of your favorite books?
You mean business books or what?
Yes.
Oh, well, I'm not sure I'm a great reader of business books, to tell you the truth. I mean,
okay, well then let's go in a different category then. What do you like to read? What do you like to read? Who do you follow? Who are you? What are you?
Well, okay, let me answer your question differently. We all the various, so M&A magazine,
yes,
PE Hub, all of those publications, buyouts, Wall Street Journal. I mean, it's not so much books, it's much more publications, and we are reading them all the time and seeing what's going on. It's a way to stay educated. But I'd say that, yeah, the team here, everybody is reading constantly.
Okay, all right, that's a better answer. Okay.
Listening to podcasts, there've been, there's the Goldman Sachs has a quarterly, I think it's quarterly. It comes out, tells you where they think the economy is going. I like that one. I like, what's his name? Ross Sorkin. What's his first name? And Andrew.
Alan?
No, Andrew Ross Sorkin, isn't it? What's his
yes,
name?
you're right.
Yeah.
Andrew, you're right.
Yeah, Andrew, right. Andrew Ross Sorkin. Deal book. I think that's excellent. There's so many Axios for kind of general news, but business news as well. Who else?
That's plenty. You give advice every day. What's the best advice you've ever gotten?
Carpe diem.
A classic. All right. For our folks who are listening who might be interested in learning more about what Sperry Mitchell does, where is the best place for them to go to learn more about the firm and about you?
Well, there's our website. And everybody is welcome to pick up the phone and call me directly. I love talking to people, or email me or text me, wherever you want to get. We work 24/7. I don't know if you saw that, all those Goldman Sachs analysts complaining, and I realize it's awful, but I was sort of thinking, yeah, well, I have always worked 7 days a week. I mean, not consistently, but
Right.
it didn't seem so awful.
All right. Well, anything else you want to share that I didn't think to ask you?
No, thank you very much for including me. I will say it's very rare I ever get asked about myself, so it's kind of fun.
I think you're fascinating, and I'm thrilled that you came on. We will certainly look at having you back to discuss some more specifics. This has been Seth Greene with Beatrice Mitchell of SperryMitchell.com. Beatrice, thanks so much for being here.
Thank you.
Thanks everybody for watching or listening, and we'll see you next time.